Deal analysis, 4 units in Colorado Springs. Hello and welcome back to the Investor Preview. I am brentonhanes. I'm a real estate investor. I'm a real estate broker. I've been doing this for 20 years. Today I wanted to show you a deal analysis now on a 4 unit in Colorado Springs. This is a deal that I was able to put together, off-market deal based on some relationships that I have with other brokers in the market, and just want to share you with some of the deal analysis I was able to put together for my client that was looking for some rental property in Colorado Springs. So let's dive into it. And before I forget, hey, don't forget to hit that subscribe button. I really appreciate it. It really helps us out. All right, let's do it. Let's jump on in it. Started into this deal analysis. I'm going to show you where you can download the exact same analysis tools that I use. I offer them for free on my website. All you have to do is go to www.realestate365.net. And then when you get to the home screen, I want you to click over on Downloads and then Free Property Analysis Worksheet Download. I also have a free investor's guide if you want to look at that. But today we're going to look at this analysis worksheet download. So once you click on that, scroll down. I do ask for some basic information. You just put in your information, and the reason I do that is because I'm always making changes to it. I'm adding new features. Sometimes I find mistakes or things that aren't calculating right, and I want to be able to let you know. So that way you have the latest and greatest, and I know a lot of us rely on tools like this to make great investment decisions. So once you fill out that information, click Submit, and you will have it downloaded right here. So it has gone into my downloads file. So there it is. Any questions on this stuff, please feel free to reach out to me. You can call me anytime, email me, and be more than happy to help you. And if you find a mistake, please let me know. I'm only human. All right, so let's jump into this 4-unit off-market deal analysis. I have downloaded this Excel file, this property analysis worksheet. I do have some videos on my channel that talk a little bit more in depth, but I'm just going to go through real quick some of the parameters that we've set for this property. Now keep in mind, anything that's blue is something that we can change. As far as numbers go, anything that's in black, that's a number, is an auto calculation. And so we just want to focus on the blue. We do have some notes down below that we can put in about the property. As you can see, I have some unit mix and what I think market rents are and things like that. So let's start at the top. Analysis date, the day the property was analyzed, who it was analyzed by. Property address, we're just going to use an off-market 4-unit in Colorado Springs for now. The year built was 1982. Property square footage, 3,066 square feet, total number of units. Now down payment, we've expressed this as a percentage. That makes it easy for me. Like I said, this is my quick and dirty one. So we are using 25% as a down payment on this one. Even though it is a 4-unit, this is what my client wanted to do. Purchase price, $608,000. So now we're going to break down the income. I like looking at a monthly income. Helps me analyze a little bit more. A lot of people use an annual income. You can see I kind of flip back and forth between monthly and annual. So it's just how I like to look at things. So we'll put in our current column, so current market or current rents. Next to it, it would be market rents, what you're gauging as a market rent. So on this one, it's real simple. It's a 4-unit. They're all 2+1s. So it makes it real easy for us to calculate that. Now, other income could be laundry income, could be storage, could be additional parking. You could throw in your RUBS in that for your utility bill back, anything that you want to throw in other income, and then you can always make notes of it down below. So you can see we have our annual gross income, and then below that we're going to have our annual expenses, current and market rent. So anything that you want to increase, you can see water and sewer, trash, electric, all the way down. You can see on the left there, admin, other, something that we can put in, and you can type in what it is if you want to add something. Property management, maintenance and repairs, and reserves, and get our total expenses, and it also expressed as a percent in our expenses. Now I'm shifting over to the right underneath that yellow box. That yellow box is instructions on how to use it real briefly. So we'll have our analysis input. So vacancy. Vacancy is always going to be factored in, especially on the 5+ units. So 4 and under, I usually like to use a month and a half of 1 unit's current rent. So roughly 4% on this one will work for me. Mortgage rate, my client was able to secure a 3.375 on this exact property under a 30-year term. Now, we're using 0% for management, if this is a 4-unit. Now, if you're going to have someone manage it for you, you can put in that. They will usually give you a percentage based off of that, somewhere between 6 and 10%. Currently in Colorado Springs, I am using 8%. If I'm using management. So maintenance and repairs, it's going to range usually between 7 and 10%. This one had a little bit higher expenses, so I'm going with 10%. Reserves, I always like to throw in 5% reserves and then our effective tax rate, which we'll calculate and talk about at a later time. And then there's another page in here called the 5-year analysis, and we're not going to get into that right now. We're just going to dive into the input and the analysis page. So if you have any questions on the input, reach out to me. Put a little, comment down below. That's totally fine. So let's jump into this analysis page. So just click on this burgundy box at the bottom, and we will see what this looks like. So as you can see, this is a very presentable page. This gives me a quick snapshot. Okay, keep in mind, this is my quick and dirty. I'm not going to get into too much detailed information and really peel back those layer of onions, but this gives me a good snapshot of what this property is going to look like. So, as you can see at the top, when it was analyzed, I think it's super important. I always like to include a picture of the property as well, and that is an actual picture. So you'll see I break it down current and market rents, our gross income here, our square footage, our year built. So I have all this stuff on a 1-pager real quick. So here's our GRM. Currently it's at 12.6. At market, we're looking at closer to 10.5. Current cap, 5.14. And that includes our reserves, keep in mind, and almost a 6.4 at market. Our cost per square foot, we're under $200 a square foot. Cost per unit, right at $152 a door. And our DCR debt coverage ratio, which is more important on our commercial properties, but it's always a good indicator to look at debt versus income on the property. So let's look at this first column on the left, our current rents, purchase price, our down payment, our first loan amount, taking in our vacancy, almost $2,000 a year, operating income. Our expenses will leave us with an NOI of $31,262. Interest rate, annual and monthly debt service, so you can look at both, will leave us a cash flow of just over $7,000 a year, or almost a 5% return on our initial down payment. So keep in mind, I'm not factoring in closing costs. I'm not factoring in any rehab. So a multifamily, it is pretty common to have some deferred maintenance. It's just a matter of how much, not if there is any. So it's very common. Now, for you single-family investors, yeah, you may have a little bit, but it's a little bit more common in multifamily for sure to have some deferred maintenance. So I'm not calculating a lot of that in. I'm just going strictly off down payment and our money off of that. Okay, so then we have our equity buildup. That's paying down our loan in the first year, and our total return. So we're looking at a 10.5% total return. So now let's look at our market rent. So currently I'm projecting about a 19% upside in rents. These are all 2+1s. They're under market. I am calculating about 19%. So looking at it on a straight market rents, now keep in mind we have leases on this current property. I've seen a lot lately on month to month, and they typically are all up at once. So you can say, depending on how much upside, I would say within a year and a half, you could probably get this property up to market rents. depending on if we wanted to create some turnover and understanding our tenant base and making sure we have a good quality tenant. And so off our 25% down payment, vacancy, you can see it went up a little bit. We're allocating on a percentage basis, operating expenses, and leaving our net operating income, our NOI. Here's our debt service, unchanged. So we're looking at just over $14,500 a year, almost just over 9.5% return on our money invested, and our total return 15.5%. This is not a bad deal. Colorado Springs, there's quite a bit of room for growth in rents, growth in appreciation. Denver's growing, but I really favor this Colorado Springs market. It's a really nice town, great layout, lots of stuff to do, and people are really nice, and our tenant quality is really good, and just really enjoying helping investors down there in Colorado Springs. So now let's look at our first year indicators here down below. At the end of the year, we're calculating just based off a 3% appreciation rates, $626,000. Our mortgage balance, so our total equity, be almost $180,000 there in our first year. So we're going to make almost $30,000 in our first year off this property, off of our equity buildup and appreciation alone. So as you can see, I broke down our little Foursquare here, and you can see total return on our investment our first year, just over $40,000, taking in our depreciation and just over a 27% return. So that's it, guys. Real basic. This is a pretty good deal, in my opinion, for Colorado Springs. And some other little deal points about this one. You know, we had a little bit of an interesting deal. We had a couple tenants get COVID, which prolonged our under contract period. So we were unable to get an appraiser out. We also had this appraised low, believe it or not. So we sent another appraiser out there, and we pretty much came in at value. So as our markets increased quite a bit, and a lot of us didn't see this coming with COVID, a lot of people just don't know how to understand where the market is going and how much growth we really saw. And obviously we don't have a crystal ball, and we'll see it as the data comes through in the first quarter of 2021 to see really how much growth we had in the Front Range in all our individual markets. But Colorado Springs is experiencing quite a bit of growth. If you have a building out there and you're looking to 1031, let me know. I have a lot of clients that are actively looking in the Colorado Springs market, and I may have someone that we can put in and do an off-market deal, take some of that stress off, and help you and cooperate in a 1031. Or if you're looking to cash out, or or even carry financing, let me know. I'm very knowledgeable on all of those areas. So anyways, guys, here's a little off-market deal I was able to put together for a client of mine. They are extremely happy, and they have some plans to even help push these rents up even a little bit more with some repairs and some CapEx projects. Not huge, but stuff that I think will make a dramatic impact in this building and hope the overall value. So I hope you guys have a wonderful day. Reach out if you have any questions or see any mistakes or just want to give me a hard time. Whatever you want to do, call me. Love to chat with you. Have an awesome day, guys, and we'll see you on the next video. Take care.